What's up, everybody? Tom here with another video. We've just seen Aaron Rodgers come out and make an announcement that he's going to convert part of his salary into crypto. This, of course, could mean Bitcoin to the moon. But more importantly, in today's video, we'll be taking a look at the stock market and what's going on with Tesla, Apple, S&P 500, Nasdaq, and one very special index that might be just getting ready to pop into all-time highs. Stay tuned to find out more, guys. This will be a good one. All right, everybody. Well, here begins our video for the market recap for the markets closed 1st of November 2021. And yes, I said November. Can you believe we're already at the end of the year, or at least like the one of the last months? We're taking a look here at the S&P 500 largest companies, and your eye cannot go past Tesla. 8.49%. We'll be talking about that shortly and what it means and whether we're in a never-ending kind of bull cycle here for Tesla or whether it's going to blow off. We've got Amazon down 1.61%, finding support at the good base. Google down 3%. Don't know if we need to look too much into this. And Apple kind of flat with Microsoft. And this led really to a flat day in the Nasdaq, a flattish day in the S&P 500, up just barely, and a movement through something you're not going to see there in the heat map just yet. Let's talk about earnings beat data, still at 77%. We've discussed this several times. Very important that we hold above 70% when it comes to beat data. If we hold above 70, generally the fundamentals are holding, and that means that the market can ramp up and continue to move on after the earnings season. And that's a very important factor. So we'll continue to watch that. Let's take a look at what's happening for this week ahead. We've got Pfizer coming out with an announcement Tuesday before the open. We've got Corsair as well, BP, Under Armour, Activision Blizzard, another big name, Zillow Group. We'll see what happens there with this one. This will be fireworks, I'm sure. Roku after the close Wednesday, Skills, Etsy. I mean, there's plenty of companies here that are coming out with results. It's not like last week where we had the big FANG stocks. There's plenty of quality tech in here, and of course, quality healthcare and other companies. Let's now talk about seasonals and season acts in general. So here we have what we expect coming into the end of the year. And we've talked about the fact that we've had the correction. We've obviously got the all-time highs now on the S&P 500, Dow, Nasdaq, etc. And what we're going to lead into doing is going into new seasonals. So we might have a bit of a ramp here early November, kind of like last time or last couple of years. And then we have a small pullback through November, maybe that last opportunity to pick up a couple of stocks, and then ramp into what we call the Christmas rally. And of course, the Thanksgiving week, usually very bullish kind of market that comes into that. So it's looking good here on the season acts. It's looking good on the VIX, the volatility index, and this begins our technical analysis component. There's plenty of seasonals that are going on right now, and it looks like a lot of them are getting ready to just get started. So while you might think you've missed out on many opportunities, there's always another opportunity around the corner. And I think that's one of the most important things that it comes to crypto, stock markets, commodities markets, or anything else. There's always another opportunity out there. Let's take a look at the VIX, the volatility index. So the fear is coming back out of the market, but it's still floating around that 16 and a bit. As long as it stays above 15, that's kind of our expectation. And if it comes down here, we sometimes see a small bounce in volatility or fear, possibly timing it with that kind of first week of November being out of the way as well, will be a discussion point. Remember, we do have FOMC statement this week. A lot of people expecting that the Fed will begin to tighten in the policy. I don't think the market's going to be that worried by that, but it's something that people will look at. Let's take a look at US oil here. So a lot of people are saying, oh, it looks like it's going bullish again, Tom. What do you think? Yeah, look, I'm just kind of floating out of it at this stage. So really, it came up to that 86. I'm very happy with that level. I think that for me, that was a very key resistance zone. And now I'll wait to see more. Are these bounces good? Yes, there's a lot of buying around this price here. And if you look at it around this $81 price market, there's a lot of buying. There's decent rally. I mean, you can see here the buying hammer, the slight rally, but I'm really wanting a breakthrough of 86 and then movement up. And the reason why is when you start to look at the weekly, when you start to think about how fast this movement's been, quite far away from the 20 moving average. We know that oil is a fairly manipulated asset class as well. And while I do think it can go longer and higher over the medium term, we just need to probably consolidate here for a little bit, ideally, And then once we move through, 92 seems to be the next kind of logical conclusion. So we'll continue to watch it. We'll cover it when it's important. And at this stage, it's hit our take profit. We're kind of just floating around waiting for the next opportunity on it. Let's move over to Tesla. So post-market, this thing is unstoppable. It's up another 1%. So you might think it was up a lot, 8.49% in the market, but it's 12.21 post. And people are wondering, where does this stop? How do we predict where these things stop? And it's a difficult question to answer because it's actually expanded away from any of the moving averages. So we had the 2-hour 20, which was the area it was bouncing off. It's then expanded away from that and it hasn't come back down. But what is going to become more shocking is when you look at it on something like a weekly and you start to say, whoa, let's pump the brakes here. How far away exactly are we from a weekly 20 moving average? And this is a fairly important discussion to have because when you move far away from the 20, so here it is 57% away from the weekly, it does beg the question of will we have a bit of a blow off and a bit of a consolidation top? And you can see here 46.88% away from the weekly 20 moving average at this stage. Not as much as it has been in the past. And Tesla is known to ramp incredibly quickly, just like it did over here, and then consolidate and come down later. So if you're feeling the FOMO, you're missing out on this, then I understand that is very difficult to do. But to really start to get involved in it here is going to be more on the smaller time frames, the 5 to 15 minutes. I don't think you'd really want to be like strongly looking at the investment case at 12.21. Following the trend is good. And at this stage, we haven't seen any signs of weakness really in this stock. But to predict where stocks go next, there's obviously the fundamental way of doing things, working out a reprice value based on the current earnings report and then seeing what it's been able to do in the past, e.g. PE ratios, e.g. EBITDA, all these types of things. But another one is fib extension. So you can take the last kind of pull and then work out where you expect it to go. So the 1618 fib just got hit. That was about 1100. And the actual 2618 fib, which is fairly common, is just underneath 1500. Now that may seem insane, but that could be what a lot of people are looking for, just underneath that $1,500 on this run. And we do know November is notoriously strong for Tesla. It's a very strong month. October has just put one in the books for sure near the end there. But will we get something like a 1500? Let's get your opinions in the comments down below. Where do you think Tesla's going before it pulls back? It will eventually pull back. You will eventually get this kind of consolidation because we've had it so many times before. A la over here, here, here. You always get these big runs followed by consolidation and a pretty decent pullback too in this stock. But this is clearly in a hyper mode now. So following the trend by moving averages is probably one of the best things you can look at doing. And in terms of setting a profit, you've really just got to look at rounds, 1300, 1400, and possibly those fib extensions along with some fundamental analysis if needed. Let's move over to Apple. Pretty slow day on Apple in terms of the big FANG stocks. Most were down or sideways. Apple created a long leg doji, which just basically means a low, a high, and it opened and closed at the same point. This shows indecision in the market at a key pivotal point. We know 150 is the key critical we want to get past. And you might say, but Tom, it happened over here before. It did, but I think that's a false breakout based on the fact that it was trapping people before the earnings report, and that's certainly what it did. So 150 remains a very important zone. The call wall has moved back up to something like up here, so that 155, 160 range. So we do have room to grow here from the option side of things, and I would love to see it get through 150, close above, and then of course continue the ramp. We're going to introduce some new things in the analysis today, and one of them is going to be ARK-K, and there is a reason, and it's coming into what we call a very strong seasonal period for it, along with an index that a lot of people have been sleeping on for a while, which is totally fair enough, but I think could be just getting started. So ARK-K hits resistance thanks to probably Tesla. A lot of the stocks in ARK-K haven't been doing that well recently, but again, if this other index that we're just about to look at goes through, this could certainly be one of these ramping kind of exchange traded funds. And when you take a look at it, look at this. We have here resistance, resistance, and we're moving into resistance, but we stopped just before and then we move through. Now, seasonality for ARK-K. Should we get through? we expect really a kind of move like that. You've obviously had that point of maximum despair. And if we get through, we probably expect it to go upwards of that 137, 140 range. But check out this seasonality. Now, there's not much data, of course, on RK, but seasonality wise, it actually has a 100% win rate in November in comparison to the other months. So September's horrible for it, October's horrible for it, win rate percentage, December, but November has been 100% positive for RK so far. Take of that what you will. Obviously, it's just a stat, not based on a huge amount of history, but certainly very interesting. And this is where things get even more interesting. IWM, the Russell 2000. Take a look at the channel. We've just posted a 2.59% up day in this. And these are, of course, the smaller companies, and they've pretty much been forgotten about since the start of 2021. So if you went and invested in February the 10th, 2021, you've basically made no money till now, pending, dividends and other things like that. If you're leveraged, you're probably down. So yeah, this has been a very slow year for the smaller cap companies. And they're just getting fired up at the right time for a specific seasonal. And again, there are some smaller cap companies that RK likes to invest in. So this could be a good sign for that. We've got resistance, 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 and we're coming up to it. We have a series of higher lows, which I love to see coming into breaks. And we've got a bit of an increase in volume here as well after the close. So do we break through? This is marginal at this stage. So what that means is we have broken through the previous little resistance here, which I think is very good. We've come up to, remember, this is the 1, the 2, the 3 touches, and this will be the 4th touch of the high. And the 4th touch on a channel does tend to be the one that breaks it. Don't ask me exactly why, but the 4th touch is one of the stronger ones to be looking at. And if it does break out, what do? We take the distance of the channel, we extrapolate that out, and that gives us our potential take profit. And look what it points to, towards that 260, just underneath 260. So if we take this as a percentage, which is going to become important when we look at the S&P 500 and Nasdaq, it's potentially got a run room of maybe 10 to 11% as an index. So that's very, very key. And we go over to the seasonals. Take a look at this. The best month of the year to generally be in IWM in terms of just seasonality is November. Then we also see that October tends to be okay, which it has been so far. November's strong, December's pretty strong, and then it really drops off back in that January period. So is November going to be strong for IWM? It's certainly starting to look that way, and I think it's a bit of a index that people have been not really focused on for a while, and there's good reason. It's done nothing, but now it's time to start getting focused on it. This is the perfect thing about technical analysis. If you enjoy the channel, by the way, guys, please remember to subscribe. We talk about this stuff all the time, and hopefully it empowers you to make better decisions yourself in your own trading systems. Remember, it's all about educating everyone into the ways that we can approach the market using replicatable concepts all the time. So the S&P 500, we've opened a new month, which means new pivots. We've got our new R1 over here, and we've got our new central pivot. So the R1's actually pointing pretty close to where we would like it to be, which is the top end of this trend line. And this is important because if we have the top end of the R1 here, which is about 47.10, it gives us a good idea that if we do slowly kind of meander up here, then we hit it. What do we expect? This trend line will most likely act as resistance because we'll have the pivot point there. We'll also have the top of the trend line. And of course, we'll be far away from the 20 at that stage. So then we get that scenario where we do this, pull back, hopefully back to the 20 daily, which will be probably the thing that makes most sense. And then we move further up over the time until we get that pullback, most likely now in 2022. And what I mean by pullback is more of a correction standard market play. I'm not talking about crashes. I don't think crashes are going to happen for quite a few years here, and I've explained in some detail why, but it's just my belief. Obviously, you can think that crashes are coming. I just don't think they do. Usually you get a crash, you don't get another crash for quite a long period after it. And it happens when most people least expect it. And still so many people talk about crashes constantly. So really, it still looks pretty positive. On the SPY, same thing. If you put the pivot here, it would be up in that area. Still got that strong kind of bullishness that's coming up here. And any pullbacks will probably be met by buyer demand, I believe, from Wall Street. Let's talk about QQQ. So we've got here the Nasdaq. What's going on with the Nasdaq? Very similar. Huge ascending channel. Beautiful stuff. If the S&P 500 is going to go the distance to that pivot, then of course we expect the Nasdaq to go to the top range. And I just want to show you, let's just say it went up in a vertical line from now. There's only about 2% leeway here on the Nasdaq until it hits its resistance. And that's very similar to the S&P 500. So if we think there's only 2% or maybe 1 to 2% before we start to consolidate or weaken or possibly dip a little bit, and then we've got the IWM that's got that 10% runway, you can see why it could be a rotational type of thing that Wall Street's doing. There might be more opportunity there based on the technicals that we're currently seeing. It doesn't mean you get rid of these and you stop looking at them, but it's something that I like to think about when we're moving through the pairs, when we're moving through the indices, sectors, and finding that opportunity of rotation. Let's talk about ETH-BTC now. So this is Ethereum BTC, and this becomes important when we discuss the idea that Bitcoin is maybe consolidating a little bit and that we're moving into a small amount of alt season before we get that back end rally from November into December for hopefully Bitcoin. And ETH-BTC did something very important. Ethereum strengthened and broke through the downward trend line. You can see here 1, 2, 3, closed above, and this was last week. And now it's found some strength in a double bottom base. Very strong type of candle formations here, and really showing that Ethereum is leading at this stage, and it does seem to be on the charts. It's actually held up a little bit better than Bitcoin just recently. And when we go over to Bitcoin, you'll notice it's languishing here across the board, but things like Polkadot have done well, and things like KSM, obviously it's joined to Polkadot. These types of things, some altcoins are now starting to find some interest and starting to find a lot more bullishness. And yes, I know SHIB's there, but we're talking about obviously a lot of the other big ones as well. So BTC US, if we look at this chart, I would say it's very difficult to read. We had that false break to the bottom. We've got a lot of buying wicks, which is showing that people are entering into it. We obviously saw that Aaron Rodgers is putting part of his money into Bitcoin, which I think is exciting for the future. People obviously using it now as an alternative asset. And the more people that adopt something due to its scarcity, the more likely it is to go up, yeah? So yes, Bitcoin's positioned in a good place. This now begins the consolidation, I believe. If we break through, of course, we're looking at that last movement. But I've made it fairly clear that I wouldn't mind Bitcoin to go down to 54 and that to be the same leg as the previous leg down. And the reason why is because then we get that A, then we've got the B run, and then we can more easily predict the C run. And that gives us a really good runway into Thanksgiving in America, into Christmas in America and around the world. And I would be super excited if we got a 54K, 55K on Bitcoin. And that might seem strange, but I love seeing replicatable, similar things happening in the markets. Just as a quick shout out for people this week, just remember we are in non-farm payrolls week. I covered this in the weekend video. The jobs number is always important for the US and around the world. This is probably the biggest bit of economic data we see every month. And we also have the FOMC press conference and statement. I'm not sure how much this will move the market. Realistically, the Fed will come out and do something they're always in the best interest of trying to make sure the market likes the announcement or at least is ready for it. And a lot of people are freaking out about it. I hope it's nothing big, but at this stage, yes, they're probably going to pull back the kind of like stimulus a little bit into the markets, and we'll see what their general statement says. But it's always been pretty pro-market, not really against it. All right, guys, thank you so much. If you enjoyed the video, please remember to subscribe. Smash that like button. It really helps us out, so please do smash it. And let us know, where do you think Tesla's going before the next big pullback? I want to know your price targets. Bye for now.